Hello, good morning, ladies and gentlemen. It's a new week, and I'm glad to be here with you guys once again. So let's confirm that we're on the same page here. So what I would like us to do is to type in hi in the comment section if you can hear my voice and you can see my screen. Let's type in hi. So this is going to be a confirmation for me that we are good to go, that we're on the same page, and I can kickstart the session. All right, so let's see what we have in the comment section. All right, so MHMD5. All right, thank you very much. 78, thank you. Hey Carrie, thank you very much. Good morning. Welcome to the new week. I hope you had a wonderful weekend. Okay, Micho, hi. All right, thank you. Hey Scott Benji, thank you very much for that confirmation. All right, I'll take this as a confirmation that we are good to go. So I'm excited to welcome you to a new week and to another session on the extreme speed. My name is Sheriff Daramola, and as usual we shall be embarking on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's our culture here on Mondays like this. We normally go through random pairs. I already have a series of pairs and instruments which I've already prepared for us for this live session. But if you have any pair you want us to look at, be it a crypto, options, currency pairs, stocks, whatever it is, feel free to drop it in the comment section, and be rest assured that I will be willing to incorporate it into our plans for this week. And one thing about this is that once we start this week and we have adopted the pairs we are going to be reviewing, this is going to be the basis for analysis for this week, and these are the pairs we are going to be monitoring throughout the week. So it's a very good opportunity for you to drop in any financial instrument you want us to look at. So with that being said, we are first of all going to review the economic calendar, where we are going to be looking at the major macroeconomic events we will be looking forward to for this week. And you know, macroeconomic events are a form of catalyst which has a tendency of bringing liquidity into the markets to drive price movement. And this is what we need to be able to catch the potential impulse leg that is likely going to be happening on the pairs we are monitoring for this week. So looking at the economic calendar here, and based on the pairs that I've prepared for us for the session, the first important event is coming up tomorrow. That's on Tuesday, and that is the claimant count change and the ILO unemployment rate, which is coming up for the pounds. And for the claimant count, we have the previous data is giving us about $30,500. Sorry, 30,500, and we don't have a consensus yet. So probably in the next 12 to 24 hours, we will have a figure to relate with against the event for tomorrow. Then we also have the higher low unemployment rate, which was at 3.7% for last month, and consensus is projecting another 3.7. So there is no positive expectation. So we shall be looking forward to see how participants in this market will be reacting to or anticipating this event in that regard. Then on Wednesday, we have this for the Bank of Japan. We have the interest rate decision coming up on Wednesday. We have the monetary policy statement, and also we have the Bank of Japan's press conference also on that same day. So these are high impact events that will be bringing some liquidity into the market. So we shall be seeing some traces, reflection on the chart as price action. Then on Wednesday again, we have the consumer price index for the pounds, and things are not looking good here, as the previous data is giving us 10.7%, and consensus are looking forward to a 10.6, which is quite a little bit lower than expectation, like 0.1% difference there. So we shall be looking forward to see how what data is going to be coming in on that day. Are we going to be having it as expected, or below expectation, or higher than expectation? We are going to be seeing that. Then on that same day, we have the retail sales for the USD as well, and things are looking a little bit positive for the US dollar. And considering the fact that there is stresses that the Fed will not be increasing interest rates as sporadic as it did last year, there is some level of comfort to bring money into the dollar, which we begin to see some reflection in that regard of the charts since the beginning of this week. So we are going to be looking at how price action will be anticipating this event too as well. So that's what we have here on the economic calendar. So with that being said, now it's time we move into the chart, and the first commodity we are going to be looking at here, as usual, is going to be the US oil. Though I already have a position this morning on the US oil, though I was taken out of that position at break even, but let's quickly have an holistic view of what is really going on in this market. So we shall be diving into the daily time frame in that regard. So here we are on the daily time frame. So what I'll be doing here is to zoom into the current structure here. That is what has been happening in the last 3 to 4 months. And this is what we are going to be using as a basis for trading opportunities for this week. So here we are on the daily time frame, and the first thing we observe here on the daily time frame, that is in the last 3 to 4 months here, is the fact that price was initially caught within a consolidation phase between the $93.50 level and the demand zone here at the $75 area, giving us some level of indecision in the market at a particular point in time, where either a breakout or breakdown of that structure will be giving us a signal of where price will be going. So during the month of December, the first week of December, we saw our price rejected the $80 level. Here we saw selling pressure coming from that level, leading to a final breakdown of the $75 area. And that was a signal that there is a tendency that sellers will likely come in at this point. However, as soon as price tested the $70 level, we started seeing buy pressure come in, price find higher lows and higher highs, and this led price action back into the $80 level, which I said earlier has been a strong selling niche for participants in this market. So price action closed last year at around the $80 level, and the first thing we observed at the beginning of this year was this engulfing bearish candle. So the US oil started on a bearish note as price action dropped significantly well, leading to a final breakdown of the $75 level, the second time in a month. And at this point, we were thinking that price action will continue to find lower lows based on this initial move at the beginning of the year, breaking down the $75 level to incite another wave to the downside. But one thing we observed is that as soon as price tested the $72 level here, we begin to see buy pressure come in, though we had a little consolidation phase around that area. And one thing about the structure is that we have this low here, which shows us that price was unable to break the previous low, giving us a higher low in that regard. And whenever we see a higher low, the next thing we are going to be thinking of is bullish. Now, we are lucky enough to take advantage of this opportunity last week as we saw price break out of the $75 level, and we were able to take over 1,200 pips as we had, I think, a minimum of 5 positions running last week. So we rode this move all the way up into the $80 level, which was our TP target for last week. And talking about the $80 level here, remember at the beginning of the year, we identified this level as a significant factor, and it's going to be our yardstick for trading activity for this year. As we said, it depends on how price action reacts to the structure that will determine if we are going to be buying or selling the US oil. So we saw selling pressure here at the beginning of the year. We sold at that point, and now price is back into that structure. And if you look at that structure closely here and compare it with what has been happening in the last 6 months, I think since the month of June last year, we saw that price action has been on a bearish momentum, and in that regard, we have the lower highs here connected to give us that bearish trend line. And if we go right back into that current structure which we just identified now at the $80 level, you will see how that level at the $80 area shares a beautiful confluence with that bearish trend line. So that you would agree at this point that we are at a critical point in this market where anything will happen at this point, and this level has a tendency of either bringing in selling momentum or a bullish momentum at this point. Now, if we take into consideration the selling niche around the $80 level here, which has been pushing price to the downside, which has been a strong bearish niche for this market, coupled with this bearish trend line here, we will be looking forward to selling if we start seeing selling pressure below the $80 level, hereby price respecting that bearish trend line one more time to incite another wave of bearish momentum to the downside. However, if price breaks out of the $80 level here, break out of that bearish trend line as well, and we start seeing buy pressure right above the structure, then it will be a good situation for us to join or add more position to our existing trade on the US oil. So with the information we have here right now, we will be scaling down to a much lower time frame where we want to be seeing what is really going on around the structure and how participants in this market have been reacting to this current level since the beginning of the week. So what we are going to be doing right now is to scale down to a much lower time frame, like the 4 hours time frame, where I want us to see what I was able to identify here, and this will be the basis, and this will be the structure we shall be using to guide our trading activity for this week. So scaling down to the 4 hours time frame, remember we had the structure figured out here at the beginning of the year where we saw this descending channel as price action consistently found lower lows and lower highs, giving us this descending channel here. Well, but that is not the most important structure right here, as we will need to move into what has been happening here since the beginning of the year. And if we look at the current structure here, look at what we have here since the beginning of the year. The year started at around here. That was this point here. So we saw the selling, we saw a bearish momentum at the beginning of the year right from that supply zone. And if you look at the structure here, this level at one point in time has been a strong demand zone, and since the breakdown happened in the month of November, we saw that sellers had continued to push price to the downside, negate all bullish potential from that level. So as a result of this, we had a strong supply zone sitting between the $83 level and the $81 area. And at the beginning of the year, we saw our price respected our supply zone, giving much significance to that supply level here, and price dropped to the $73 level. We saw another bullish momentum climb up again, and we were able to connect the series of higher lows here to give us that resultant bullish trend line that you can see on your screen right now. So price is within a recovery phase right now, trying to recover what it has lost at the beginning of the year. So at this point, price is back within the $80 level here, which is within this channel that we have here. So in order to have a better perspective into what is really going on and to make a decision for this week, we want to see what is really going on around this area. As you can see, as soon as price tested the $80 level here, we have been witnessing some consolidation phase around here, which is giving us a clue that there is a tendency that price might likely go through a retracement phase. Remember last week we saw this bullish momentum which broke out of the $75 level, and we were lucky enough to take advantage of that move. And since price got into the $80 level, a very important key level we identified on the daily time frame, we have been witnessing a consolidation phase here, and there is a tendency that price might likely break down structure to incite a retracement phase, which will probably anticipate another wave of bullish momentum. So at this point, we will be scaling down to the 1 hour time frame. let's see what is really going on here and how participants in this market has been relating to the $80 level since the beginning of this week. So scaling down to the 1 hour time frame here, this is what I was able to identify here this morning. So let's zoom in so that we can see things more clearly here. So at the beginning of the week, I mean during the early hours of today, we saw a situation where the week started on a bearish note. As you can see, this is the $80 level. This is where price closed last week here. And what we saw at the beginning of the week was quite interesting. We saw selling pressure come in, and we had the support level up for this week at the $79.50 level, which was a little bit broken to the downside. I told you I took advantage of this opportunity here, moved my stop loss accordingly, locked in my profit, but I was taken out at break even as price action climbed back to the upside here. So we have a simple channel there that we want to be using to guide our trading activity for this week. Now we have the resistance level of the channel sitting at the $80 level. Then we have the support level of the channel sitting at the $79.50 area. And you know, it's our culture here. Whenever we have a simple flat channel like this, all we need to do is remain patient and look out for either a breakout of the channel to give us an opportunity to buy, or a breakdown of this channel to give us an opportunity to sell. Now, in addition to this flat channel we have here is this temporary bullish trend line, which I was able to identify here after connecting the series of higher lows since Wednesday of last week's trading session. You can see how this bullish trend line has been guiding bullish momentum. And during the early hours of today, we saw the breakdown of that structure to give us a sign that this bullish trend line might likely not be strong enough to continue to hold bullish momentum at that point. So in this regard, we already saw the breakdown of structure, and from a technical standpoint, whenever we see a breakdown of structure like this, we expect at one point in time price will come back, do a retest of that structure, followed by sudden pressure to incite another wave of bearish momentum. And at this point, this is exactly what has happened here. We've already seen a breakdown of this bullish trend line. Price appears to have come back into this trend line one more time. We can see we have a sharp rejection of that level, though a bullish momentum is going on at this particular point in time. So what I'll be looking forward to right now is to see sell pressure come in here on my lower time frame, and then if a further breakdown of the $79.50 level happens, then we want to be joining that decline to the downside. So this is how we want to be selling the US oil for this week. And if a breakdown of the $79.50 level happens, I want us to take into consideration the fact that we are on a bullish momentum since last week, and a breakdown of the $79.50 level could likely be a retracement phase. And if we look at this, well, we saw this impulsive move. Those who are taking advantage of this position right above the $75 level here last week will definitely, and at one point in time, want to take some profit. And while taking some profit, while take profit activities going on, we shall be seeing this as a reflection on the chart as a retracement phase. So if a breakdown of the $79.40 happens the second time, we want to be selling. But one thing we want to take note is that this is a counter trend opportunity, as this is going to be a retracement phase of that previous impulse leg, where the anticipation of another wave of bullish momentum is going to be happening anytime soon. So what I'm trying to say here is that once we sell below the $79.50 level, if price breaks down that structure and we sell, we'll continue to move our stop loss accordingly to lock in some profit, as this is a bullish momentum and we don't want to get caught up in any scenario that will likely take us out of our position in a loss. So when price drops below the $79.50 level and it continues to slide to the downside, probably breaks down the $79 area, move your stop loss accordingly, probably to break even. Then continue to look out for structures that will support an opportunity to add more position, and we'll ride the move all the way down. So at this point, I would prefer our TP target for any sell position here to fall within the $77 level here, which also shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the first week of this year. So let's see how this is going to go out. As soon as price drops, we ride the move all the way down into the $77 level, and remember to continue to move your stop loss accordingly to lock in some profit. And if we start seeing buy pressure coming here, we want to be anticipating another bullish momentum. So that is that for a sell position here on the US oil. Now, in as much as we are looking for selling opportunity, considering the breakdown of that bullish momentum, bullish trend line, we should not ignore the possibilities that buyer could likely come in from this point. Now, if we are going to be buying the US oil at this point in time, I want to see an outright breakout of the $80 level. Remember how important the $80 level is on our daily time frame, which we said it was a strong selling niche for participants in this market. So what we want to see to buy the US oil is to see an outright breakout of the structure where the price takes out all the sell position there, give us some liquidity to push a bullish momentum. So what we want to see to buy the US oil at this point, and based on this current structure, is that a breakout of this $80 level here with a bullish engulfing candle, move to a lower time frame, look out for buying pressure right above the structure, and it will be a very good situation for us to buy the US oil at this point. So these are the scenarios we shall be looking forward to on the US oil for this week. So we are either looking for a breakout of the $80 level to buy, or a breakdown of the $79.50 level to sell. So at this point, I'll pause at this point, and I will be scrolling through the comment section to see if there are any questions. So if you have any questions whatsoever, feel free to drop your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions whatsoever before moving on to the next pair. So let's see what's happening right here in the comment section. All right. Okay, so we have Kaja55, good morning. Okay, 428, good morning to you. Hello, 237. Hey, Steamroller, good morning. Glad to have you around. Hope we can do EURJPY today. Okay, let's see what we can do about that. All right. Okay, from South Africa, 499, good morning. Okay, all right. In the absence of no questions, I want to assume that we are on the same page here. So let's dive into the next option, and the next option we shall be looking at this morning is the US Tech. And on the US Tech, I already have a position running this morning after citing some selling pressure coming in below the 11,570. But before we go into the details there, let's run through the daily time frame. Let's see what is really going on the US Tech before making a decision for today. So we shall be diving right into the daily time frame. Let's have an holistic view of what is really happening in this market. And on the daily time frame here, like I've always said, the first thing you would observe is that price action has been bearish. In fact, throughout the course of last year, we continue to find lower highs and lower lows, and as a result of that, we were able to connect the series of lower highs here, which gave us that beautiful trend line which has been guiding bearish momentum throughout the course of last year, as at no point in time did we see price break out of that trend line. However, things got a little bit interesting in the month of June when we saw that sellers were finding it difficult to break through the $11,000 level. So we saw as soon as price got into the $11,000 area, we started seeing selling pressure. We started seeing buy pressure coming from that level, negating all selling momentum to bring that area to be a strong buying niche. The same thing happened here again in the month of September stroke the early days of October. We saw another bullish potential opportunity there, but unfortunately for the buyers, as soon as price got into the 11,700, we begin to see some selling pressure negating all bullish momentum at that point. So because of the demand zone we have here at the $11,000 area, which gave rise to this significant key level we have identified at the $11,000 area, and we said this is going to be guiding our trading activity for this year. And in fact, we were lucky enough to be part of this buy position as we took advantage of the breakout of the $11,000 level. Remember, during the course of last week's trading session, we identified this impulsive move to the downside where buyers rejected any sell possibility there, where price action transitioned into a double bottom structure, and that was a good signal that we might be seeing a reversal pattern from here. And in fact, we were able to join the breakout retest of the $11,000 level, and this gave us about I think, how many pips was that? A minimum of 500 pips, and we had multiple entries as we rode the move all the way into our TP target last week at the $11,500 level. Now, talking about the $11,500 area, we need to understand how important the structure is. Now, if we go to as far back as the month of November here, when price action broke the 11,700 the first time in like 6 weeks, we saw the breakout of the 11,700. And one thing about the breakout of the 11,700 is the fact that as soon as we saw the breakout, we saw price go through a huge consolidation phase here, where participants we're not sure if this bullish momentum will continue, or probably it's just a false breakout. And we saw that price was caught within that channel between the $12,100 level and the support level of the channel sitting at the 11,500. With a sharp rejection of the 12,100 on the second week of the month of December, which also shares a beautiful confluence with that bearish trend line, we saw this impulsive move that led to a final breakout of that support level at 11,500, which was the first time we will be having a breakdown of that structure in the space of 5 weeks. And with a breakdown of a structure like this from a technical standpoint, whenever we cite a breakdown of a structure, we expect that one point in time price is likely going to come back, do a retest of that structure to incite another wave of bearish momentum. So with the current structure we have here and the information we have gathered at this point, you would agree that we are at a critical point in this market around the 11,500, where anything could actually happen. And at this point, there is a possibility that price will do some selling pressure on our lower time frame to incite a bearish momentum, probably to do a retest of the $11,000 level, a level which was broken last week to the upside. So we might likely see price come back into the structure to incite another wave of bullish momentum, or it could break down the structure to incite a sell-off in this market. So that is one scenario we will be looking forward to going into the new week. Then another possible situation that could happen here is if price breaks out of the 11,500 and probably tends towards the 11,700, which shares a confluence with that bearish trend line. So we might likely see price do a retest of that level to incite another wave of bearish momentum, or a breakout could incite a bullish momentum during the week. So these are the things we are going to be looking forward to at this point, but it is very important we understand what's really going on around the 11,500, and in that regard we shall be scaling down to the 1 hour time frame. We want to see how participants in this market has been reacting to this current structure here to decide if we are going to be buying or selling the US tech for this week. So if we start seeing selling pressure come in here on our lower time frame, then we want to be getting ready to join a sell momentum. However, if bullish momentum, if we start seeing trend continuation pattern, probably like a bullish rectangular pattern around that level, then we will be thinking of buying. So at this point, to get a better perspective into what is happening here, we will be scaling down to the 1 hour time frame. So when we scale down to the 1 hour time frame, what is the first thing we observed here? Now, looking at the current structure we have here, let's look at what has been happening around the 11,500. So this is the 11,500 which we identified on the daily time frame, and you can see on Friday we saw a little breakout of that structure, which we are not sure if this is a true breakout or a false one. But as soon as this week started, we saw our price was caught within the channel between the 11,570 and the support level of the channel sitting at the 11,520, both right above the $11,500 level. So at this point, we want to be looking out for a signal, and you know, from our experience here in this community, whenever we have a flat channel like this which emphasizes some level of indecision in this market, what we want to be doing is to remain patient and wait out for either a breakout of the channel to give us a signal for bullish momentum, or a breakdown of the channel to give us a signal for a bearish momentum. So in that regard, I positioned myself in such a way that I had my orders placed at both ends, hoping that we see a breakout of either side to give us a signal of where price will be going. And in fact, during the early hours of today, we saw the breakdown of the 11,520 to give us a signal of where price action will be going, and this led to the final breakdown of the 11,500 at this point. So for those who are taking advantage of this move right at this level, kudos to you for being on standby to catch that move. And what you want to be doing right now is to move your stop loss accordingly to lock in some profit. So at this point, I will be advising that somewhere below the 11,520 or above the 11,500, it could be your 11,510, you could move your stop loss to around that area, and let's see how far this is going to go. And for those who had missed out on this opportunity, we want to see if the market will be giving us a second chance to join that decline, if it's going to be a bearish momentum we are going to be seeing for this week. So at this point in time, we saw a breakdown of structure, and from a technical standpoint, we should be expecting at one point in time that price might likely come back to a retest of either the 11,520 or the 11,500, where selling pressure on our lower time frame will give us that confirmation to join that decline to the downside or add more position if you're already in the trade. So at this point in time, and for those who had missed out on this opportunity, well, I will be advising you to remain patient here, and let's see if the market is going to be doing some retracement back into the structure, where we will be looking out for selling opportunities there on our lower time frame to join that decline to the downside. So that is what we are going to be looking forward to sell the US tech for today. Now, with that information we have there on this one, the next thing I want to be doing right here, considering the fact that we have been on the bullish momentum since last week, remember we took advantage of this move right here when price started with a consolidation phase initially, and we waited for the breakout of the 11,100, which gave us that opportunity to buy last week. And as you can see, price had continued to find higher lows since the beginning of last week. So what I want to do here is to connect the series of higher lows here, and let's use this as a basis, as a trend line we shall be using to guide trading activity for this week. So in addition to this 11,570 and 11,520 channel, we want to be having a trend line which we will be using to guide trading activity for this week. So in that regard, we shall bring out our line chart at this point, and let's connect the series of higher lows together here. And if we do that appropriately, this is what we are going to be having. Hold on a second, let's do this well. All right, so we have something like this. So for the sake of clarity, let's increase the pixel to like 2. Okay, so we have something like this. Bring back the candle chart, do some readjustment, and here we go. So we have a bullish trend line now that has been guiding bullish momentum since last week, and we have the 11,400 level here, which also shares a beautiful confluence with that bullish trend line. So now as we head into the New York session and selling momentum have started here, we are going to be watching this move closely. So it's either we see price come back to do a retest of structure to incite another wave of bearish momentum, and if price decides not to climb up but instead continues to fall to the downside, then we want to be waiting at 11,400. It's a beautiful bus stop where price action, where we have a structure that shares a confluence with that bearish trend, that bullish trend line. So we want to see how price action is going to be reacting to this level. So as soon as price gets into the 11,400, and if you are already in this position here, you want to move your stop loss, lock in some profit somewhere around 11,460. Let's see how price action will react to this level. So if price gets into the structure and we start seeing bullish momentum like buying pressure on our lower time frame, or something like a reversal pattern, it could be your double bottom structure, your inverse head and shoulder pattern, your wedge, whatever it is, and we start seeing that bullish momentum from that level. So that means this bullish trend line is so strong enough to hold bullish momentum. So we want to be getting ready to buy at the breakout retest of structures on our lower time frame. Then we join the rally to the upside. However, if price breaks down the structure, remember it shares a confluence with 11,400. So if price breaks down the structure, then we want to be seeing this as a bearish signal, as the bullish trend line is no longer strong enough to hold bullish momentum. So if a breakdown happens followed by selling pressure, then we want to be adding more position to our existing trade. And for those who are not yet in this trade, this will be a good opportunity to sell at this point. So that is the scenario we are looking out for selling opportunities on the US tech. So I hope you'll be on standby to catch that move when they finally happen. Now, for those who are thinking of buying at this point, I've already told you that we will be looking patient enough to see how price action reacts to the trend line here at around the $11,400 level to decide if we are buying. However, if price does not drop to the downside but instead continue to climb to the upside, then I will wait for price to break out of the 11,570, taking out all the sell positions here to give me some liquidity. Then if I start seeing buy pressure around this level or above the 11,570, then it will be a good situation for us to buy the US tech. So it's a very simple setup we have here on the US tech. So I hope that we'll be on standby to catch the move when it finally happens. And one thing I normally say here is to screenshot my screen so that you can use it as a reference point whenever you're about to make your decision on or during the New York session today. So that is that on the US tech. If you have any questions, feel free to drop your inquiries in the comment section, and I will be taking I'll be checking the comment section from time to time to see if there are any questions in that regard. So moving on, we are going to be talking about the GBPUSD, and on the GBPUSD, I had a situation running this morning after cited some selling pressure here. But before we go into the details there, let's run through the daily time frame and let's have an holistic view of what is really going on in this market. Now, on the daily time frame here, we identified the fact that throughout the course of last year, the pounds has been rolling down to the downside, confirming that the sellers are very strong in this current market. And as you can see here, we have this bearish trend line after connecting the series of lower highs to confirm that truly it has been a bearish momentum last year. However, during the month of November, we saw a final breakout of that trend line, further giving us a signal that the trend line is no longer strong enough to hold selling pressure. And what we had here was quite interesting. Since the month of September, we saw this bullish momentum started here after price tested the 1.0400 level, and we saw price action continue to find higher lows. And as a result of that, we had this bullish trend line figured out at this point. Now, at the resumption of this year's trading, we identified a key level at the 1.200 level, which if you look closely into the structure since the month of June, we saw how that level had been a major determinant of price action. See how it has been a demand zone, a selling niche, which was a selling niche here initially before buy pressure came in one more time. And then at the beginning of the year, we saw that price has been finding buy pressure around this area. And what makes this more important is the fact that it shares a confluence with that bullish trend line that we identified earlier. and we saw this bullish momentum at the beginning of the year. We took advantage of it, but last week price action was caught within a choppy situation, as we saw how price action was caught within a consolidation phase between the 1.22500 level and the 1.21100 level, to emphasize some level of indecision in this market as we wait out for either a breakout or breakdown of the channel to give us an opportunity to either buy or sell. So at this point in time, we have a structure here at the 1.22500, which I will be using as a yardstick for trading activity for this week. We want to be seeing how participants in this market will be reacting to that current structure to decide if we are going to be buying or selling the GBPUSD. So with that being said, we want to be scaling down to the lower time frame to see what is really happening here. So if a breakout of the 1.22500 happens, this might likely be a good situation for us to buy. But remember, we have a certain niche at the 1.2400 level, which we'll be taking a close look at as price action moves in that direction. That is, if a breakout of the 1.22500 happens. However, if we continue to see selling pressure below the 1.225, remember throughout the course of last week, we saw selling pressure below the 1.225. And if the selling pressure here continues, from a larger perspective here, I'm not sure if we could be selling from here unless we see an outright breakdown of this bullish trend line and the 1.200 level to give us a selling opportunity. But if we scale down to a much lower time frame, we begin to see things more clearly. So in that regard, we shall be moving into the 4 hours time frame first of all, and to see what I was able to identify here prior to the opening of this trading session. So right here on the 4 hours time frame, the first thing I observe here, you can see the 1.2100 level, that key level we identified on the daily time frame, and this is where price started the year. The year started on a bearish note, as you can see here. We had this level holding selling pressure throughout the course of last year, the later part of last year. We saw selling pressure from that structure. And then during the course of last week, we saw the breakout of the 1.21 level to give us a signal that buyers are coming in gradually in this market. However, since the breakout of the 1.21 level, you can see that it was a choppy situation for us here during the course of last week, as price action continued to consolidate between the 1.225, the level which we identified on the daily time frame, and the 1.2100 level to emphasize some level of indecision. However, during the first part of last week, we saw how selling pressure was coming in here, and we had the bearish trend line figured out, and midweek we saw the breakout retest of that structure. And if you look at the nature of these candles here, you can see that they are sharp rejection of both the 1.21 and the 1.21650 to emphasize that there are some level of buying strength in this market. Now, with the current structure we have here, it's important to scale down to a lower time frame. Let's see how price action really reacted to the 1.22500 level to decide what our next line of action will be. So when I scale down to the lower time frame, that is the 1 hour time frame, this was what I was able to find. So the week started on a bullish note. We saw the support level for the week sitting at the 1.22200 level here, and the highest point price got to at this week is the 1.22900 level. So we have a channel here, the resistance level here at the 1.22900 level, and the support level sitting at the 1.22200 level. So whenever we have a structure like this, we want to be looking forward to either a breakout of that structure or a breakdown of that level to give us an opportunity to either buy or sell. And one thing we noticed here during the early hours of today was that price action broke down the 1.22200 level to give us a bearish signal at this point. So with the current situation we have here and the breakdown of this level, it was a beautiful signal that sellers are likely coming in at this point. So I was able to join that decline to the downside, but it appears price is back into our entry point at this point. So going into the New York session today, what I want us to be looking forward to here is this. As long as price remains below the 1.22500 level, that is this level here, I want to keep on I want to keep holding on to my sell position here. And the reason why this is simply because of what happened last week. Despite the fact that we saw bullish momentum here, we saw how the 1.2 to 500 had been a strong selling niche, rejecting all bullish potential here, pushing price to the downside. Though we had the breakout of the structure here during the early hours of today, but one thing about the structure is that it could turn out to be a false breakout. As you can see, price is back below the 1.2 to 500 and it has continued to remain below that level. So if price continues to remain below that structure, we want to be comfortable in our sell position at this point. And for those who had missed out on the sell position here, you can continue to look out for selling opportunities below the structure to join that decline to the downside. And if you need further confirmation, then you could wait for price to do a breakdown of the 1.2 on 650, followed by selling pressure below this level on our lower time frame to add more position to our existing trade. And if a further breakdown of the 1.2100 level happens, then we want to be thinking of adding more position to our sell position here. So these are the scenarios we shall be looking forward to sell the GBPUSD. However, in as much as we are looking forward to selling opportunities here, like I always say, we always want to keep our options open so that we can catch any contrary situation that happens at this point. So even though we are looking forward to selling opportunities, we should also keep the option of buying open as well. So what I will be looking forward to buy the GBPUSD here is if price takes out the sell position at this current area. In fact, all the sell position between the 1.22900 level and the 1.2 to 500. So I want to see a take out of that position. And in fact, a further confirmation at the breakout of the 1.22900 level should be giving me a confirmation that the buyers are strong, they've taken out all the sell positions there, and there is enough liquidity to drive another wave of bullish momentum to the upside. So if that does not happen and price continues to trade below the 1.2 to 500, I will remain comfortable in my sell position on the GBPUSD. So these are my views here on the GBPUSD. If you have any questions, feel free to drop your inquiries in the comment section and let's see how I can be of help in that regard. So with that being said, I have less than 10 minutes. I would want to go into the EURJPY as indicated by Steamroller. Though I have other pairs I want us to look at. I wanted us to look at the USDJPY and the XAUUSD, but because we already had a suggestion earlier on, so let's quickly run through that. So the first thing we are going to be doing here is to scale to the daily time frame. Let's see what is really going on this chart. So on the daily time frame, this is what we were able to have here. As you can see, let me do some readjustment here. So we have a supply zone here, which has been holding selling pressure since when was that? I think the month of June last year. So the last 6 months we have been witnessing selling pressure come in around the 148.400 level. So this whole area has been a strong selling niche for participants in this market in the last 6 to 7 months. And another thing about this current structure is this: since the demand zone was identified here, we can see price has continued to find higher lows, and as a result of this we have this bullish trend line figured out. However, during the third week of December last year, we saw the breakdown of that trend line, and also we saw the breakdown of this 143.00 level to give us a signal that sellers are likely coming in at this point. And with the breakdown of the trend line from a technical standpoint, we should be expecting that price will do a retest of structure, and it did happen. We saw the retest of structure on the last day of last year, and we saw this sell move that pushed price to the downside here. Though the year started on a bullish note, this is where price action started this year. We saw the situation here when price started at the 138 level. We saw buy pressure come in at the beginning of the year at the 138.00 area. So we saw the first touch here, and then we saw the second touch here during the course of last week's trading session. On the last day, sellers push price into the 138.00 level, and one thing you notice is that this 138 level is yet to be broken. So at this point, we should notice that this level has been a strong buying niche in this market. If we go to as far back as the month of September, we saw how this level also was holding buy pressure at this point. And the same thing has happened here at the beginning of the year. And then at this point now, we saw how we saw another rejection of that level during the course of last week's trading session. To be precise, on Friday, we saw another rejection of that level. So at this point, we need to understand what is really going on here to decide if we are going to be buying or selling the EURJPY for this week. So we have a channel here. So if we are going to be buying here, then we should at this point have our TP target sitting around the 143, which will be giving us about, let's see, about 400 pips if price moves in that direction. However, if a breakdown of the 138 happens, followed by selling pressure on our lower time frame below the structure, it will be a good position for us to join a sell momentum at this point. So this is what we are going to be looking at. But before we do that and understand what is happening here, we need to scale down to the lower time frame. Let's see what our price action has been reacting to the 138.00 level since the beginning of this week. So if we scale down to the 1 hour time frame here, this was what I was able to identify here on the 1 hour time frame. So that is the 143 level. Sorry, hold on a second. I want to attend to some. So I'm sorry for the breaking transmission. So I'm back and it's all fine. So right now we are on the 1 hour time frame, and one thing we observed here on the 1 hour time frame is the fact that we had this bearish move that started, when was that? On, I think, last week. We saw this bearish impulsive move which came into the 138 level, which we identified on the daily time frame. So let me bring this in so that we can see things more clearly here. So we have the 138. Let me do some readjustment to suit in this current structure. All right, so we have the 138 level. And one thing you would observe is this: as soon as price tested the 138 level, we saw how price continued to find higher lows at this point. And another thing I was able to identify is the fact that whenever we have a higher low like this, then definitely we are looking forward to a possible bullish momentum gradually coming in this market. And in addition to that is a technical structure I was able to identify here, which looks like a double bottom structure, which from a technical standpoint is a strong reversal pattern. And whenever we have a reversal pattern like this in the form of a double bottom structure, the next thing we want to be doing is to identify a neckline for the structure. And if we do that judiciously well and connect this rejection of the seller's rejection here, we can see that we have a simple structure here at the 138.800 level, which is going to be serving as a neckline for this week for any bullish momentum here. So whenever we have a neckline set like that, we want to be looking forward to a breakout retest of that neckline to give us a confirmation that this reversal pattern is now valid. And I think we already have that. So at this point, I will be advising us that we should be buying above the 138.00 level. So anywhere above the 138.00 level is a very good area for us to be buying the EURJPY or remain in a buy position on the EURJPY. So with that being said here, the next thing I will do is to make things a little bit easier for us to monitor during the New York session. Let's have a trend line also to support this current structure to guide our bullish momentum here. So we have a bullish trend line here after connecting the series of higher lows, and then we shall be using that to guide any bullish momentum at this point. So if price if you had missed out on this opportunity, that is the breakout of the 138.00 level, then you could wait out for structures to evolve in such a way that price climbs up a little bit, probably into the 139.4 or 500 level. Then you wait out and see if there's going to be a retest of structure, which will be sharing a confluence with that bullish trend line. And if buy pressure comes in on our lower time frame, then you want to be adding more position to our existing trade. And if you are not yet in this trade, it will be a good opportunity to buy at that point. Now, if that does not happen, well, we have another structure to look out for at the 139.500, which is a strong psychological level considering the round figure of that price. So we have the 139.500 here. As you can see, we have a resistant level at that point. If we bring out our line chart, bring back our candle chart, now you can see selling pressure around this level. So price is approaching that structure. So for the sake of clarity, let me label this. So we have 139.500 level. All right, so I'll place it at the top right hand side of my screen. Okay, so if price does not come back and do a retest of structure to incite another wave of bullish momentum, then if price continues to the upside, breaking out of the 139.500 level, this will be another opportunity to join that rally to the upside. So these are the scenarios we shall be looking forward to on the EURJPY. I hope Steamroller is still in the house. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. Now, another thing that caught my attention is this. Considering the fact that we are on a bearish momentum, at least since the beginning of the year, we should also take into consideration the possibility that sellers could likely come in. And if you remember what I told you on the daily time frame, I told you how important the 138 level is since the beginning, for the last since I think last 6 months, I guess. It has been a major buying niche for participants in this market. And like I told you, for us to sell, we might want to wait for price breaking down this level to give us that confirmation that bearish signal is coming in. But we might not wait for that breakdown to happen. And the only way we can take advantage of it is to position ourselves, that is below the 138.800. If a breakdown of this bullish trend line happens, then we want to be seeing this as a bearish signal. That is, that trend line is no longer strong enough to hold selling buying momentum. But we don't want to get too excited. We'll wait for a retest of the structure, look out for selling pressure in our lower time frame, then we could actually join that decline to the downside. And if a further breakdown of the 138.00 level happen, taking out this buy position here, then we'll be looking forward to adding more position to our existing trade at the site of selling pressure below that structure. So this is what we are going to be looking forward to sell the EURJPY for this week. So that is my scenario here. If you have any questions, feel free to drop your inquiries in the comment section of this video. Okay, all right, it's okay. You're welcome, Steamroller. Let's see if I can do one more pair, if I can rush through one more pair for today before I call it a day. So what should we be looking at? Let's look at the XAUUSD and see what is really happening here. So the first thing we do here is to scale up to the daily time frame, and on the daily time frame here, this is what I was able to identify. And remember that we have a key level at the $1,800 level, which has been a major determinant of price action throughout the course of last year. But that is not what we want to be focusing on right now, as we will be focusing on what has been happening since the beginning of this year. So since the beginning of the year, you would observe that price has been very bullish as price action broke out the very important structure at the $1,800 level. And remember, throughout the course of the month of December, we saw how the 1,820 has been a strong selling niche. And at the beginning of this year, we saw the breakout of that structure. And since then, price has continued to find higher highs and higher lows. So last week trading session started around here above the 1,860, and price continued to climb to the upside, and we were lucky enough to take advantage of some of this position as we rode the move all the way into the $1,920 level. And since price got into the 1,920, that was where price closed last week. And at this point, we are at a very critical point in this market. one, we are at a psychological level, considering the round figure of that price, and at the same time, anything could happen at this point. And if we look at the impulsive move that started this here, you would agree with me that this current structure has a retracement phase overdue at this point. And those who are taking advantage of this bullish momentum at the beginning of the year should at one point in time definitely be doing some take profiting activities, which will be reflected on the chart as a retracement phase. So when will this retracement phase happen is what we don't know. But if we continue to monitor how price action is reacting to the $1,920 level since the beginning of this week, we could tell if we start seeing selling pressure below this level on our lower time frame, then that could incite a sell-off, which might bring price back into either the 1,860 or this bullish trend line at the 1,820 level to incite another wave of bullish momentum. So in that regard, and in order to understand what is really going on here, to make a decision for this week, we need to see what is really going on around the 1,920. So before we go down into our 1 hour time frame, let's look at what I was able to identify here on the 4 hours time frame. So on the 4 hours time frame here, this is how the year started. So this is where we saw the new demand zone for this year at around the 1,820 and the 1,830, and price action has continued to find higher highs and higher lows at this point. Now, if we look at what happened last week, this was last week's trading session. Price was initially caught within a channel here between the 1,880 and the 1,870 before we saw the breakout of that structure to signal a bullish momentum for that week. And price has consistently found higher highs at this point. So what we are going to be doing here right now, we are at the $1,920 level, the level which we identified on the daily time frame. So we want to see how price action is reacting to the $1,920 level since the beginning of this week. So when we scale down to our 1 hour time frame, we begin to see things more clearly. And on the 1 hour time frame, I was able to identify a setup here, a channel. So this is where price started this week. Price started at around the $1,916 level. So this is where the bullish momentum started for this week. Price rose to the $1,929 level. And at that point, we saw selling pressure come in from that structure. So we already have the resistance level for this week sitting at the 1,929, and the support level for this week sitting around the $1,916 level. So for me at this point, selling below the 1,920 is going to be a very good situation for me, and I've joined that sell momentum right below the 1,920, and a further breakdown of the 1,916 with selling pressure below the structure should be welcoming additional position to our exiting trade. So for those who had missed out on this opportunity here, well, you will want to remain patient here and wait out to see a further breakdown of the $1,910 level here. You can see we have a structure here which we can use to guide trading activity during the New York session today. So for the sake of clarity, I will label it 1,920 level. Let's place it at the bottom right hand side of my screen right now. So if you are not yet in this trade or you still need further confirmation, you could wait for price breaking down the $1,920 level followed by selling pressure on our lower time frame. Then you could join that decline to the downside, and it's a very good opportunity to add more position if you're already in the sell position at this point. So that is what I will be looking forward to sell the XAUUSD for today. And if the contrary happens and price action climbs up, taking out the sell position here, breaking out the resistance level for this week at the $1,929 level, then it will be a good opportunity to buy the XAUUSD for this week. So let's remain patient here and wait out for structures. For those who are already in this trade here, let's see if price will continue to plunge to the downside, and a further breakdown of the 1,920 should be welcoming additional position to our existing trade here. So that is my view here on the XAUUSD. I hope I made myself clear. If you have any questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So let's run through the pairs we talked about today and do a recap for today, and let's call it a day afterwards. So the first thing we did today was to talk about the US oil, and on the US oil I told you I was already in a sell position initially before I was taking out at break even, but in order to trade this for this week, we already have a simple setup, and that is the flat channel between the $79.50 level and the $79.50 level. Okay, sorry, the $80 level, rather, I misspelled this. The $80 level and the $79.50 area, which is a support level for this week. And in addition to this channel is this trend line, which has been guiding bullish momentum since last week. We said we shall be using both the structures to guide trading activities for today. So if a breakdown of the structure happened, which has already happened, retest of structure should be giving us a confirmation that this trend line is no longer strong enough to hold buy pressure. So we have decided to sell below the $79.50 level for today. So that is the view we are looking forward to sell the US oil for today. But if instead price does not plunge to the downside and instead it continues to find higher highs, then a breakout of the $80 level is going to be a good situation for us to join that potential rally to the upside. So that is that on the US oil. Then we went on to talk about the US tech, and on the US tech I told you how I took advantage of a sell position here after citing the breakdown of that beautiful channel we identified during the early hours of today, which is between the $11,570 and the $11,520 level. And I told you I took advantage of the breakdown of the structure, and we are in to ride this move all the way down. However, for those who had missed out on this opportunity, I have told you that whenever we have a breakdown of structure, there is always a possibility that price will come back at one point to do a retest of structure, which will be giving us that opportunity to join or add more position to our existing trade to the downside. Now, there is a catch to this sell setup that we have here, and that is this bullish trend line, which has been guiding bullish momentum since last week. So as you can see, price has consistently respected that bullish trend line. So I've told you that as we ride this bearish move to the downside, as soon as price gets into this trend line, which also shares a confluence with that 11,400, we want to be moving our stop loss accordingly. And I advise that we should place our stop loss around the 11,460 as soon as price touches this bullish trend line or the 11,400, as we want to see how price action will be reacting to that level to decide if we are going to be adding more position to our existing trade or we are going to be getting ready to join a reversal move. So what we are going to be looking forward to around this area after moving our stop loss is to see if we start seeing buy pressure around this area or probably above this bullish trend line, then we will be getting ready to join that potential rally to the upside. And with the further breakout of the 11,570, we look out for additional position on our existing trade. But if instead price breaks down this trend line, then that's a sign that the trend line is no longer strong enough to hold bullish momentum. And if it is followed by selling pressure below the structure, then we want to be adding more position to our existing trade. So these are my views here on the US tech. So I wish we'd be on standby to catch this move when they finally happen. Then we went on to talk about the GBPUSD, I guess. I think we spoke about the GBPUSD. And on the GBPUSD, we also have a structure between the 1.22900 level, which is the resistance point for this week. And we have the 1.22200 area, which is a support level for this week. So we already had a breakdown of the support level, which is a beautiful signal that sell momentum is gradually coming in at this point. But one thing I told you about this current structure is the fact that the 1.22500 level has been a strong selling niche for participants in this market since throughout the course of last week's trading session. So I laid much emphasis on the fact that as long as price remain below the 1.22500 level, we want to remain comfortable in our sell position. And if a further breakdown of the 1.21650 happens, we want to be adding more position to our existing trade. A further breakdown of the 1.2100 level also will be giving us another opportunity to add more position. However, if price continues to the upside in such a way that it breaks out of the 1.22900 level, then at this point I want to be seeing this as a good signal to buy the GBPUSD. So those are my views here on the GBPUSD. Then we went on to talk about the EURJPY, which Steamroller introduced to us, and we were able to identify a simple setup here on our 1 hour time frame. And following this impulsive move that started last week, we were able to identify a reversal pattern in the form of a double bottom structure where we had the neckline sitting at the 138.800 level. So with the neckline sitting at the 138.800 level, we want to see a breakout of the neckline to confirm that this is truly a reversal pattern, and this is exactly what has happened here. We already saw a breakout of that structure, and for those who are taking advantage of that move right there, kudos to you for being on standby to catch that move. However, if you had missed out on this opportunity, I have told you that you want to remain patient. We have another structure around the 139.500, which has been a strong selling niche in the past. So we want to see how price action will be reacting to the 139.500. So if a breakout of the 139.500 happens, then this will be a good opportunity to buy or add more position if you're already in this trade. However, if selling pressure resumes at the 139.500 in such a way that we start seeing selling pressure in our lower time frame, there is a likelihood that price will be coming back to do a retest of the neckline that was broken during the early hours of today. And as you can see, it shares a beautiful confluence with that bullish trend line, and this might likely incite another wave of bullish momentum if we start seeing buy pressure around this area on our lower time frame. So you could join that rally to the upside, then add more position at the breakout of the 139.500. Now, in as much as we are looking forward to buying opportunity here, we should also take into consideration the fact that this could turn out to be a trend continuation pattern, considering the fact that we are on a long-term bearish momentum here. So we have decided to use this bullish trend line as a guide to identify selling opportunities. So if during the New York session today, price breaks down this bullish trend line, a line which also shares a confluence with that 138.00 level, followed by selling pressure below that structure, then it will be a good opportunity for us to sell. And if this leads to a further breakdown of the 138.00 level, remember how important this level is on the daily time frame, breaking down the previous structure here, that is the buy position that was here, finding a new low, then we want to be looking out for opportunities to add more position at the site of selling pressure below this level. So that is what we look forward to on the EURJPY for this week. So let's be on standby to catch that move when it happens. Then we close the day with the XAUUSD, that is the gold, and on the gold here we saw that though price we had a breakout of the 1,920 during the early hours of today, but immediately within 4 hours price action came back into that structure, breaking that structure to the downside. So in that regard, we've identified a support level for this week, which is around the 1,916, and the resistance level for this week sitting around the 1,929. So if, like I said during my live session here, that if price continue to trade below the 1,920, we want to feel comfortable in our sell position here. So I already have a sell position triggered, I told you, and a further breakdown of the 1,916, which is a support level for this week, retest of structure should be welcoming additional position to our existing trade. And a further breakdown of the 1,920 should be welcoming additional position as well. So let's be on standby to catch these moves when they finally happen. So if you are thinking of buying, I will suggest that you shouldn't think of buying yet unless we see a breakout of the $1,929 level, taking out all the sell positions here to give us that confirmation that buyers have come to stay here. So when we scale down to a lower time frame, we see buy pressure here. We want to be adding more position to our existing trade on the XAUUSD. So on this note, I wish you best of luck today. It has been a wonderful moment, and I appreciate your attention as we get ourselves prepared for the New York session today. And like I always say here, we don't want to get too excited when price action breaks out of our structure. Immediately we see it, we sight a breakout of structure, we scale down to our lower time frame, look out for retest of structure confirming the direction of the breakout, then we could join that rally or decline at that point. So thank you very much once again. I really appreciate, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to review all the pairs we have been monitoring since the beginning of the week and prepare ourselves against the New York session tomorrow. Do have a wonderful evening. Bye bye.